You're listening to The Money Hour with your host, Tina Mitchell, and co-host Keelan Harvey on Alternative Talk AM 1150. Now, back to the show with local mortgage experts Tina Mitchell and Keelan Harvey.
Welcome back to The Money Hour with your host, Tina Mitchell.
And co-host Keelan Harvey.
Your local mortgage experts right here at 1150 AM KKNW, the Saturday, December 1st show. It is a great day to talk about money. That's what the show is about, how to make money, save money, and have a better quality of life for you and your family. If you're hearing our show at a different time or day, you are listening to a rebroadcast, but we're here to answer any questions or connect you with the guests that we have on the show today. Please call at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. In studio right now, Joseph Kidworth with K-Law, Kidworth Group and Associates, and we're talking about collection accounts and public records. Joseph, thank you so much for coming back in.
Well, hello, everybody. Good to see you all. Thank you for having me.
Yeah, great smile that you have. Too bad that our listeners can't see your bright, smiley face.
Right?
Yeah.
Wouldn't that be wonderful?
It would be. And the sweats that you're wearing today. Love that.
Right? Thank you. I appreciate that. Thank you for having me, by the way.
You're welcome, Joseph. A little bit about Joseph. Joseph has been renowned in the financial credit industry since the late 1990s. He is first noted as a young financial advisor for the large worldwide insurance company, but over time has become known as a fine expert on the finance credit industry by fans and critics alike. Throughout his years of understanding the financial credit industry allowed him to collaborate with large banks and mortgage companies nationwide to restore and bring credit education to the consumers. At the present time, and since 2007, Joseph has helped consumers to understand federal laws and state laws in regarding to the legal credit auditing, as well as educating them on how to maintain a healthy financial lifestyle. Joseph is focused on providing legal credit auditing to the consumer against any credit agencies, creditors, collection agencies, and any company that do reporting on consumer credit reports with emphasis of forensic consumer rights and protection. Joseph is knowledgeable in both federal and state laws to help rehab your credit rating.
Joseph, glad to have you back, buddy. We've talked quite a bit about credit and how important it is. Me and Tina being from the mortgage industry, how important, Joseph, is it to take care of your credit when you're thinking about buying a home?
First, though, that was a long bio. My goodness.
Well, you wrote the dang bio. Victoria does give you a minimum amount of words to put on the bio.
That was like the entire show.
It was awesome.
Just a bio.
It was awesome, Joseph. I like you so much that I used it even though you were over the maximum words.
Goodness gracious.
Oh, that's enough from you, Joseph. On to the next.
Show's over. That's it. Wrap it up.
Wrap it up.
Thank you, Bob. So why is it important? Because for many different reasons, especially when it comes to purchasing a home, as the guest in the house tonight, is it tonight? Well, we're in Seattle. Sorry.
I know
my
it's a little
time
dark
zone
out
is messed
there.
up, right?
Yeah.
We understand the mortgage industry, and it's very important to know about whether it's bad debt or good debt. And I'm sure you guys know that certain debts are underwriting. It doesn't require to be paid, right?
Yes, yes.
So, but then that's a big mistake.
Yeah.
Why? Because if you do not pay this debt, even if it's a small one, and they do purchase a home, well, that's opened up a huge can of worms for collection companies. Not for collection companies, actually for the consumer. Because now the collection companies has the power to put liens against that new property.
Yes.
So, and that's just massive, massive error that most people do, and they just do not understand because of the lack of education. So,
and that's really the key thing in your arena. And I know that you work with a lot of our clients, and I just introduced you to one of our financial advisors that represents here in the studio, and just some amazing stuff that you're doing, Joseph. And I want to give you that shout out. So let's talk about bad debt and how that affects the process when you're trying to purchase a home.
Sure, fantastic. Number one, I believe, and you can correct me if I'm wrong. An underwriter do not require you to pay a bad debt if it's under $1,000.
It depends on the loan type, but yes, yeah. Depends if it's government, conventional, yeah.
If it's a collection account, like for a credit card, you know.
And sometimes even more than that. You know, if you've got conventional, depending on what the findings have to say.
Yeah. So in a way, obviously, it is good and it is bad. So what I do suggest to the consumer is to try to take care of these things prior to buying a home. Especially if an underwriter is advising you, look, it is okay not to pay these things because they're so minor and it's not going to cause any problems. during the loan process, but eventually will cause a problem later on. And I have the perfect example. Are you guys ready?
Okay, we're ready.
All right. Haul yourself against your seat because it's going to hurt.
I wish everybody could see us in studio here. We just have so much fun. Go ahead, Joseph. Let's hear your story.
I have somebody refer me this guy just the other day, and he called me up and said, Joseph, I need your help. I said, okay, I'm selling my house. I purchased my house about 15 years ago. I had a business with somebody else. Business went down under. I got a $14,000 credit card that we couldn't pay. And my house is on the market and ready to close on the 12th of December. I said, okay, that's great. That's awesome.
Yeah.
But here's the bad news. What are the bad news? Well, I called the collection company because I trying to close this deal, and I told them that I have a little extra money on my bank, and I wanted to settle this account. And they said, well, sure, we could do that. Let's go ahead and give you a call in about an hour or so. Well, the collection company, as you all know, and maybe not everybody knows around here, but you guys know that I used to be a nationwide certified collector. So what this guy did, he just did a major research on the consumer's name and found out that there was a lien on his property for $14,000, as well knowing that the MLS showed up that the house pending to be closed.
No way.
And this debt, it was for 6.5 years ago.
Wow.
How can you help me, Joe? So I said, well, what do you want me to do?
Yeah.
They said, well, I told them I'm more than happy to pay the $14,000. They say they don't want $14,000 anymore. They want $35,000.
Yeah. Yeah.
Oh.
Yeah. That's so crazy.
So my point is, if an underwriter is advising you to do not pay small accounts, that's a big can of worms because if you let them go for years and years to come, and once it's time to sell your property because you just want to cash out or refi or buy something bigger, guess what? They put a judgment against you.
Yeah, and that's why it's it's important to Joseph to have some really advice of what this is going to look like, because there's things that you think you should do that are common sense and pay off, and there's other things that you shouldn't. It just really depends. And I really like the fact that you've got the legal side behind as well, because your firm is a law firm, and so it has that legality side that can really come in and step in. So yeah.
So, Joseph, what if that, and in fact, they put and I know liens are tough. I mean, they got you, like you're talking about, between a rock and a hard spot. That's kind of the ultimate lien. They know they're going to get paid. You can't do anything about it. And if you do something with the home.
We can hire Joseph.
We can hire Joseph, and he may be able to find a loophole, but it's tough,
It really is, yeah.
So, I mean, what can you do about that? Speaking of Joseph, and, how could that affect you negatively in the future if that goes to that?
Well, like I said, just like this gentleman that called me just yesterday. I mean, $35,000. That hurts. Obviously, he has $400,000 equity, so the collection company knows it.
Yeah,
right?
yeah.
So remember that we talk about a big bonus check?
Yeah.
Guess who's going to get a big bonus check for Christmas?
Yeah.
The guy who's collecting is dead, because they usually get 3% on the balance that they collect, right? So my point is, make sure that these things are taken care of prior to buying a home.
Yeah.
Because it will affect you. Why? Number one, a collection company can actually put not only a lien against your property, but a judgment.
Yeah, and the key is to talk to an expert. I mean, even on the mortgage side, you get people that, and they have all the best intentions of the world. You get online, you start Googling some stuff, and next thing you know, you start making some moves. And some of these moves can cause more harm than good.
Yeah.
And you really need to know an expert like Joseph or us in the mortgage industry that can really navigate through this, because there's a lot of bad information, weird on the internet, right?
And nothing that would send to Joseph, but what we see on the side of the mortgage side when it comes to credit is the worst mistake is people paying off their credit cards. They think they're doing a great thing, not pay off, but pay off and closing them. Paying off debt is good, but closing those credit cards can be devastating, especially if you don't have a lot of trade history. And Joseph can come in and help out on that, but it's after the fact. It would be much better not to have to do that afterwards. So, Joseph, what about not paying off small collections and how that's going to affect after a purchase of home?
Sure. And going back to what I was just stating earlier, if you just let it sit after purchasing a home and you let it sit there, so chances are that we're looking at about tons of money, not only in interest. The collection obviously will try to collect against you because they have a lien against your property, court fees and attorney fees. So that's why it's really bad. And if it's a little tiny bit collection, it can turn from a $500 collection account, it can turn into normally about $3,000-$4,000.
Yeah,
so,
crazy.
There goes your closing cost.
Oh, that's tough. So I always hear and a lot of people always say, I'm just going to wait and just wait for it to fall off my credit. So can a collection company collect a lien? And he's already laughing about it. Can they collect
We
after?
thought they were good questions.
Yeah.
Maybe not so much.
Where's Bob?
I heard 7 years or 6 years. Is there how does that work?
Let's tell you what. Liens, once you have a judgment against you, they can renew every 10 years.
Ouch.
Yes. So, but if they do not have a judgment against you in the state of Washington, the statute of limitations is actually 6 years to collect a bad debt. But if they do file a lien against, not a lien, but a judgment against you, then, sorry, too bad.
So the difference there is from just a collection to actually filing a judgment and getting a lien, then it goes past the 6 years and now you're in trouble.
Exactly. But see, collections are very smart because they know the statute of limitations is about to expire.
Yeah.
So they immediately go to court and file, a petition to get a lien against so-and-so person, a judgment, so they can go ahead and renew every 10 years.
Yeah, and you've talked about, too, that was really interesting the first time I met you, and that's when I knew I needed to have you in studio to represent this space, was about with the collections and when you pay it off and how they actually then just sell your collection to another collection agency.
Right.
Yeah, so explain that to our listeners.
Right.
Because who would even know that unless you are in the industry?
Yeah, or just hang out in bars. People talk a lot in bars.
Especially with Joseph.
Right?
Well, he just got back from his long trip, and yeah.
I'm still looking for a Bob. So, yes, it's actually terrible to pay a collection company, especially knowing the fact the majority of collection companies do not have any proper records to validate the debt, right?
That's how they get deleted from you, working with you, yeah.
Yeah, exactly. So you come to us, we'll just do the proper proceedings, and you're going to be just fine. But if you're trying to negotiate and do it on your own, it's a little bit tough.
Yeah.
It really is.
Yeah.
So my suggestion is find a professional like ourselves that we can take care of you. And just don't wait it out because I'll tell you what, a collection company will never forget about you.
Yeah,
You
not when they
think
can keep
do.
making money.
Exactly. So
Kind of like their residual income.
Oh, of course. Of course. Yeah. And just so you know, the credit bureaus and collection companies that are affiliated, they kind of scratch their backs.
Yeah.
That's why you get to see that stuff being reported again and again and again and again. So.
Messed up.
Yeah, they're pretty ruthless. I mean, any information that you provide is going to be used against you, and that's pretty much it, and they'll do whatever they can to get their debt. I mean, that's their job, and they go to pretty good lengths.
It's scary. It really is for some people.
What can people do? I mean, obviously they're going to talk to you. Are there any general tips that you can give right out of the gate that maybe can help people to navigate?
In 2 minutes.
In 2 minutes, some tips. Well, number one, call Bob. No, number one, you got to understand what's on your credit report.
Yes.
So then you can just look at the problem, find out what the problem is, and tackle it. Just don't let it go or just wait it out. That's a tip number one. Pull your credit report twice a year. It's very important. You can just do it through one of those, companies out there.
Yep.
And once you know what the problem is, then find a professional so they can teach you how to read it.
Yeah.
Then you know exactly what to do. Now, if an account has not reached out the credit report just yet, but it's in collection, I suggest to negotiate the debt prior going to your credit report.
Got it.
Right?
Yes.
Because that's not going to affect absolutely anything on your report.
Exactly.
That's some of the tips.
And you do complimentary audits.
Absolutely.
At your, and I think that's just really awesome to where you'll take a look at their credit. And I've said this before, but I'll say it again because it's just a good connection for me because I have gotten a speeding ticket before. And I know that if you have an attorney and their attorney takes it to court, it's gone. I mean, I've never had a speeding ticket on my record, but that's why. And the same thing with credit. You just need somebody to fight on your behalf. They understand how the rules work and where the violations are to their rights and how things are getting reported on the credit report. Or, as you'd mentioned, it's the documentation piece that really they don't have and they need to have. And so, so Joseph, again, thank you for all that you're doing in your arena. Thanks for taking care of our clients in our mortgage practice, as well as the listeners here of the show. Really appreciate you.
I love to do that. It's my passion.
Yeah, whenever you're here in the country.
You know what? It is what it is. I don't want to go over that right now. Okay.
next show.
Next show, please.
Yeah.
Until
Thank
next
you so
time.
much, Joseph.
No problem.
And coming up next in the Money Hour, stop leaving dollars on the table, why you aren't the boss you should be, and what you don't know is costing you. Laura Curry with Difficult Happens, Curry Support Services, right here on 1150 AM KKNW after this short break.